Welcome, everyone. It's the Crypto Lark. Super excited to have on today Josh Rager, otherwise known as Josh Rager. Rah! Josh, how's it going?
Hey, it's going pretty well. Appreciate you having me.
Good to have you on. Now, Josh, for everyone out there in the audience, he is the co-founder of BlockRoots. He's also an advisor at Level Invest. So we're going to be talking about Level Invest today. And he's also a crypto trader. So we're going to be talking about trading, the markets, and we're also going to be diving into Level Invest and kind of what they're doing. And that's, of course, for anyone who hasn't aware of that yet, this is one of those services that lets you just drastically reduce your fees when purchasing cryptocurrencies. So we talked about that service as well later in the interview. But Josh, let's just jump straight into it. And I want to get your thoughts on the market as it is right now.
Yeah. So, of course, recently, right? What do you think about that 42% gain in the last couple of days, right? That was pretty cool, wasn't it?
That was crazy.
You know, so, and whether that's based on fundamentals from China or not, or whether it's just big players. I always like to say big players. People say, well, it's big players because in the end, right, we talk about playing the market, and it is kind of a big game that we all like to play. But whether that's people stepping in or whether that's China in the fundamentals, I think that it's bullish. You know, so a lot of people right now are discussing whether or not this is just another higher low, right? If you look over the cross of the last 3 months, we just seen that triangle dip down. And then, of course, people are like, bear trap. Now people are saying bull trap, right? So is it a bear trap? Is it a bull trap? I think for the most part, what we have to keep in perspective is the amount of volume that came in, okay, at 7,300. And when I talk about what Ryan from BlockRoots, as well as I myself, that we've been talking about a lot lately, is just looking at the order book, looking at what you call the footprint, looking at the buys versus the sells. And there are a lot of buyers down there that really suppressed the selling. So a lot of sellers stepped in, market sold, but there was a big hand at play that actually stepped in and kept limit buying. Of course, these big players like to hide their orders, right? They don't want you to see because, again, a lot of money. So they typically tend to limit buy, limit sell. Mm-hmm. And we saw a lot of that down in the 7,300 to 7,500 mark. Of course, we were only down there for what, 3 days? So it didn't take long. And for me to see a reversal that fast, it's just, to me, it just sticks out. Honestly, right now, I'm more bull biased than I am bearish. So,
and when you say reversal, like if you haven't looked at the charts, and obviously I think a lot of people have looked at the charts and they know what happened the other day, but like, it was reversal. It was a reversal. It was like, oh my gosh, that was like crazy. We went up $3,000 in the space of a few hours, which was, you know, from the point that I was a 42% gain. It's just mind boggling in how big. I think it was Bitcoin's third biggest percentage day, which is
right.
Wow.
Insane for the price of Bitcoin. I mean, you're talking about a 30% change back in the day, 2011, 2012, right? Something like that, when it was dollars, right? But now, you know, 30 cents is 30% of a dollar, but you're thinking of thousands of dollars, which is just insane. You know, so.
Yeah, and the amount of money coming in to make it move like that too. I mean, we're talking,
right,
you know, quite a large market. I mean, we're not talking about gold. Gold's a multi-trillion-dollar market, right? And Bitcoin will probably get there one of these days, but we're talking about a very large market. So we're talking about hundreds of millions, billions of dollars coming into the market of money that was waiting on the sidelines, buying up Bitcoin. So would you say that's kind of the most important data that you guys at BlockRoots are looking at right now in terms of what's affecting the market? Or is there some other data that you think is really important that people should be paying attention to?
Yeah, I think right now, primarily it is watching the amount of volume coming in, right? It's watching, you know, a lot of things what people look at as far as market structure. And so really looking at the support and resistance levels. For one thing that we saw was that we had we had that support that broke down from 9K down to the 8Ks and down to 7Ks. Now we've seen price jump back up. Right now, though, we're actually right below that support. We're being held down by that weekly resistance, okay? And so that is something that we're watching right now. I think that we've got, what, a couple days left in October. So we've got the monthly close coming up, which is not too far from now. It's $9,600, which is the monthly open that we want to break above. If Bitcoin does close above $9,600 as far as the monthly candle, that's actually quite bullish. I'm gonna say that it's gonna continue to move on up back to the 10,000s if it does close above 9,600 in October. Of course, this is all speculation, guys, right? Nothing's, as I always say, nothing's financial advice. Technical analysis is about probability. It's not about certainty, right? So this is all about probability. I believe that if it can close above that, the market structure, we start to get some changes here and it continue to move up. above those resistances, I mean, that would be bullish for sure.
I look at the probabilities and technical analysis as kind of like poker, but in a way much more complex because there's so many more moving parts to it. But it's really a game of probabilities. It's not to say that this is definitely what's going to happen. It's this is what might happen based on probabilities and what has traditionally happened in those kind of situations. So, you know, it's interesting because I talk about trading on the channel. I'm not a technical analysis channel, but I try to keep people really informed at a high level what's going on and the different things that are happening and things to consider when trading, and try to educate people on the risks and how to manage risks and stuff like that. I look at it kind of like sex education, right?
Sure.
You know, you need to tell people are going to trade no matter what, right?
Exactly.
And you need to know the risks and know how to manage those risks. And so I want to get your perspective because I know you're you know, you're doing some margin trading. So what do new traders need to know about margin trading, and how do they what are some tips that they can use to manage their risk when margin trading in particular?
Yeah. So I even had, it's funny that you say this because ironically I had a guy who said, hey, I tried BYBIT, you know, because I believe, and I think that you may have shared about BYBIT too as well. I believe that it's a great exchange as far as margin because the other day, of course, when you had that 40% gain, you had Deribit, you had FTX, you had a lot of these kind of overload, have some issues. Even BitMEX as well have some major slippage. Binance even is in the game now, right? But it seemed like BYBIT was one of the only few, if not the only one, to not have major problems during that time. So again, I think that it's a great exchange, but you do have to have risk management. I had a gentleman who said, as we always talk about, hey, try to keep it low leverage because the higher the leverage, the quicker you're gonna get liquidated, meaning you lose all your funds that you're trading there. But this gentleman is newer. I tried it, he said, and I quickly got liquidated because I did a 30x. He sent me a DM on Twitter, and I was like, "What are you thinking? You tried margin trading, and you just thought you just go ahead and just do a 30x on the first try, right?" So that's a quick story, right? And I think that that's the number one thing is that just like with trading or anything in general, we are impacted by emotion, specifically greed. And because of greed, we tend to want to hit that high leverage button. And the issue with that, again, is that the higher the leverage, of course, the quicker you get liquidated, the shorter the move that it takes. You know, you're looking at less than 1% for 100x, you know, less than 2% for 50x, and so on. And so for me, one of the biggest things that we talk about is making sure that you're managing risk because from actually using lower leverage, you're never going to see people in traditional markets, well, most people, right, professionals who use more than 5x, maybe up to 3x, right? And so it really, you know, crypto is really changing the game here when it comes to this leverage. And BitMEX came out and they were the first mover, and after that, right, it's like exchanges are the new ICOs of 2019. Everybody wants to do an exchange. They've seen the success of Binance and BitMEX, and I've even had DMs from new exchanges who want to offer 500x. I'm like, 500x? It's not even possible.
You don't need to stop. We don't need more X's.
more and more numbers. Of course, Binance.
1 million X.
That's right. A percent of a percent, 1 millionth of a percent it moves and you're liquidated, right? So I think that's the number one thing. It's also important to have stop losses in place. Yeah. Another thing that we talk about is typically you want to try to avoid you know, for the most part, market buying and selling if you can. But when it comes to margin trading, if a trade goes wrong, probably one of the best things that you can do to make sure you get out of a trade is to market stop. Yes, you're going to be paying a little bit more fees, but as volatile as Bitcoin is, would you rather pay a few more dollars in fees, or would you rather get burnt by a $500 candle, right? So a lot of times I've had to hit the market stop just naturally, just because I'm like, okay, oh, yep, okay, this is going wrong here. This is going the opposite way as far as the probability goes. The market does its thing, and I had to do that. Yes, did I pay a little bit more in fees because of the market stop? I did, but you know what? In the end, I was a lot happier because I did that. So that's one thing to keep in mind too. If you want to get out of a trade, make sure you get the right orders, make sure that you get the right price, but it doesn't make sure that you get out of the trade. Market will allow you to get out of the trade. So that's probably another thing that I would advise people to look into.
You know, it's interesting. I was talking to Ben from BYBIT, the CEO, a week or two ago, and one of the things he said was that the big boys, the big institutional players who are using the platform, they use like 2 or 3x leverage, right? And he says it's the retail guys who are using 20, 30, 40, 50x, right?
Exactly.
And so if you want to trade like the big boys, actually look at what the big boys are doing, right? They're the ones who are making those much more consistent, steady wins when trading, and they're using very small leverage. We're talking like 2, 3x, 5x at the maximum. And the other big thing, and I keep saying this, and I feel like I cannot drill this into people's heads enough. Don't use your entire portfolio for trading. This is a classic retail mistake. They're using half of their Bitcoin or 100% of their Bitcoin, and they're doing 20x, and they're going, yeah, I'm a genius. I'm gonna make money overnight, and then the market moves and you lose everything.
Right.
You know, the big guys, they're using like 1, 2, maybe 3% of their portfolio in these trades, like not 100%, not even close.
Exactly. Yeah, and I think that's another mistake too, is thinking that you always have to be in a trade. We've got a gentleman over at a younger guy, and I don't say that because he's just newer to trading. He's 18 to 20 years old, right? So I mean, he's got a lot to learn, and he tends to overtrade a lot. And I even talked to him. I said, you know, I think that you're overtrading. He'll message me, hey, I gotta get in this short right here. I gotta get in this move, and I'm like, do you really though? And he'll ask me what I'm doing. I'm like, I'm on the sidelines right now because I just don't feel like the way the market looks. I would rather wait for a setup. And I think that's another thing that you can tell people is wait for the trade to come to you. Mark out certain places on a chart, look at the chart, look at support and resistance, look at some other things, and wait for the price to come to you. I mean, eventually, as volatile as Bitcoin is, typically it will come your way eventually, wherever you have that limit buy or sell. But you don't always have to be in a trade. And over trading is probably one of the fastest ways, along with putting most of your portfolio in a trade, to lose your money, right? So
yeah, over trading, man, such a classic mistake that people make, and it's so true. You just have to be patient. There's that saying, and it's actually about traditional markets, but I think it totally applies to crypto markets as well, that the markets simply exist to paraphrase, of course, simply exist to transfer money from the impatient to the patient.
Right.
You know, so
exactly.
Be on the patient side of that equation, guys. You don't want to be on the impatient side and be over trading, trying to chase every single candle out there. The big guys, you know, they're making a handful of trades a year because they wait for the setups. They wait for the setups to come to them. They wait for the probabilities to be in their favor, and then they move. They don't try and chase every single thing out there that drives you crazy. Now, I want to get your thoughts on this because I've definitely heard some people saying that they think that margin trading is hurting the crypto economy, that the futures markets are hurting the crypto economy and hurting Bitcoin. What are your thoughts on this?
Yeah, I think derivatives are derivatives. They're there. It allows people to get in. It allows institutions to get in. They want to have these instruments to trade with. I think that, you know, is derivatives hurting the traditional markets? Traditional markets, last time I looked at the S&P, looks like it's doing just fine, right? So
hasn't it just hit like a new all-time high?
I mean, yeah, it continues to hit highs. If you look at from 2008 when we had the crash, right, all the way up, and it's kind of probably continued to move high with dips and valleys in between. But you know, if you have to almost separate Bitcoin, you know, there's crypto, there's Bitcoin. You can separate it that because a lot of people don't like to put altcoins and Bitcoin together. But if you look at Bitcoin and derivatives, I mean, in the end, they're really two separate things. I mean, if you truly believe in Bitcoin and you believe the fundamentals of Bitcoin and what it stands for, then and I think that as you see, a lot of these institutions are getting in. Why would Fidelity get in? Why would all these people get in, these institutions, just to crash the price? I think that they see the value of it too. And I think if you're bullishly fundamental on it, that there's nothing to really be worried about, right? If it truly is what we say that it is. Also, too, I think when it comes down to it, if you saw on some posts today, too, I think there's some on-chain analysis from Glassnode. I'm a trader advisor for them, by the way, just a conflict of interest. But they did post some information on their charting tools that they have that there has been a 30% increase in Bitcoin wallets holding at least 1,000 Bitcoin, not exchanges. So these are not exchanges holding at least 1,000 Bitcoin has went up 30% over the past year. So for me, that's saying that there's a lot of big players getting in. There's a lot of wealthy pockets who want into Bitcoin. They see the value of it. And I'm not really worried about derivatives. Yes, it hurts holders more than it hurts traders, right? Because the market can kind of go down. It can be tamed more. But in the end, it is what it is. On the logarithmic chart, if you look at it, we're heading to some new highs in the next few years. So not too worried.
I think this is a common misconception too, that they'll only ever short the market. They play the market, and when they think it's time to short it, you've got more money shorting the market because you have all these big players, and they will also long the market when it's time to long the market, right? And they play in different volatility thoughts and stuff like this. But I think there's a big difference too between the CME Bitcoin futures, which are of course cash settled futures, the backed futures, which are physically settled, assuming people actually take the physical settlement on those, and of course the bigger market. I mean, it's so funny, we spend so much time talking about the CME and backed and these regulated markets, whereas BitMEX and BYBIT and Binance and KuCoin and all these guys are doing just mind-bending amounts of volume. But we have so much folks, oh, there's a CME futures gap, like who cares? Like Binance did like 3 times as much volume yesterday. It was just Binance. Like combine all of the futures markets across the Bitcoin ecosystem, and the CME then starts to look a bit smaller. But there's this like obsession of like, oh, the CME and the futures gap and all this stuff. Do you think we're giving too much attention to these guys?
Yeah, I think the gap is kind of a meme, right? That because the Bitcoin market is ongoing, it never closes, and so you have a lot of these other futures markets that actually close, and you have gaps that are more relevant than more of a Bitcoin market gap where it's not as relevant. And it's true that gaps don't have to close. I believe that there are gaps on the Amazon chart. If you look at the Amazon stock chart, I forget what the gap is, but I mean, it would have to basically nuke 90% down, like the Amazon chart, to fill that gap. Is it going to eventually do that? I don't know, maybe not, but it seems like they're taking over the world. The whole point being is that it's kind of a misconception that gaps have to fill. They don't have to fill. But a lot of them do, right? So yeah, I think we give a lot of credit to CME. That's because that's where the most professional traders are at. But again, like with backed, you don't have a ton of volume there, right? So there's a few hundred Bitcoins being, as far as the volume of that. Okay, well, that's a couple $1 million. That's great, but let's be serious here. Like you said, BitMEX, Binance, how many millions, hundreds of millions of dollars do these guys move compared to a few million on backed? So probably a little too much credit to that. It is good though. The more we see that increase, it just probably shows that that's just the more adoption we're going to have.
And of course, the futures markets are not the be all end all. We're actually seeing a lot more derivatives products coming in. I mean, it's a real double-edged sword with these things. We see Backed has announced that their Bitcoin options are coming in about a month, 6 weeks or so maybe. The CME is going to be releasing Bitcoin options early next year. The Bitcoin ETF, I know it's become like a meme at this point, one ETF, but I mean, the reality is we are going to get an ETF approval someday, right? It may not happen in the next year. It might happen sooner than we think, right? But it's coming. And so all these derivatives, yes, they bring liquidity, but they also bring Wall Street. I mean, and all their Wall Street fun games. Who really wants? If you were having a party, would you invite Wall Street to your party? No, probably not. but we're, as a crypto economy, they're coming whether we like them or not.
Right. Yeah, no, and I think in the end, if you want adoption to come, I mean, you have to have adoption from institutions. You have to have Wall Street get in. I mean, it's just there's a connection there, right? There's the SEC, there's the government, there's Wall Street, and I'm never going to stand on some conspiracy theory, but there's always connections in there. People know people, and you know that if it's going to get regulated or if it's going to get approved, and they're going to get their piece of the pie. They just are. So really, in the end, it's a gift to be able to play in this game. It's a game in the end, and we have the gift, the ability to play with them. And so, yeah, we don't have the heavy hand here, but certainly, like as we talked about, if you're a believer in Bitcoin, fundamentally, I mean, I believe that, as you said earlier, kind of like gold, $1 trillion market. I mean, I believe we get there eventually. It's just going to take time and patience. So
that's it. Now, recently, Blockroot's published some data, and I think you actually made a video about it, but it was about institutions accumulating altcoins. So can you kind of break that story down a bit for us? What altcoins are they actually looking at when we talk about, because obviously Bitcoin gets most of the conversation because it's getting the most infrastructure built around it. It's got the most on-ramps, got the most interest from institutions, it's got all these derivatives products, et cetera, but what about the altcoins?
Yeah, so looking at that, Grayscale actually put out, and actually they're in a Bitcoin investment trust. So basically they allow institutions to have access to Bitcoin and also altcoins, right? So for the most part, typically these institutions didn't really, even though now some have ability to get into Bitcoin, but now it's with Grayscale, they have the ability to get into altcoins. Now with altcoins, the majority of altcoins that were being accumulated in their portfolio and the volume of it was mainly Ethereum. Okay, so Ethereum and Ethereum Classic. There's other altcoins as well. There were hardly anybody who seemed to be interested in Bitcoin Cash or Ripple. So if you like Ripple or Bitcoin Cash, guys, I'm sorry. I'm just telling you what the report says. But majority did include, again, Ethereum, Ethereum Classic, and I believe there was some interest in Horizon, maybe Zcash, some other things. But primarily Ethereum. And of course, if you believe that Ethereum is going to solve the scaling problem, then there's no reason not to be bullish on Ethereum as well. And I believe that if these guys have big trust in it, then that says a lot.
And of course, that's just what Grayscale's doing. I mean, if we look around the space, we've seen a lot of different interest from different, organizations and companies and institutions in different altcoins. Obviously, Ethereum has, remained very popular, and yes, right. XRP is getting some, purchases from some different banking partners, and we see Microsoft building on top of Bitcoin and stuff. So I think the overarching thing here is we're still early in this phase where we are seeing companies adopting blockchain technology, but also accumulating strategic amounts of different cryptocurrencies, and it's not just Bitcoin, right? I know the Bitcoin maximalists like you think, oh, only ever Bitcoin. Like, no, that you've got very, very serious companies which are buying Ethereum and using Ethereum and building on top of Ethereum and a range of other altcoins as well. And it's going to be really interesting in 10 years to see who the survivors are. Bitcoin will be a survivor. I think that's where there's a lot of confidence around that. The rest of the survivors, that becomes an interesting question. So the question for you is, your personal opinion, outside of Bitcoin, what altcoins do you see as having that really long-term potential?
Yeah, there's not a lot of altcoins that I personally hold, right? I mean, majority of my portfolio, at least 80% is in Bitcoin. I think that, personally, I believe that I'm not a Bitcoin maximalist, but yet I am, right? I think fundamentally right now we're in a Bitcoin market. Bitcoin has been strong. Some of the altcoins are starting to kind of curve down in reverse somewhat. We've seen that recently, especially with the Chinese altcoins, right? Based out of there after this news, and with Neo just blasting off recently, stuff like that. But I still don't hold Neo or VeChain or any of those. I do hold Ethereum. I do hold Decred, just because of some of the fundamentals with that. Also Ravencoin, I'm actually interested in, just because, again, it was, no pre-mine, no ICO. I feel like they don't have like a lot of conflict of interest, like a lot of altcoins specifically with ICOs. So for me right now, I'm looking at Bitcoin, Ethereum, Decred, Ravencoin, and, I may jump into something like BAT, basic attention token, something like that, just because they have a browser and they seem to be building. And so, again, I'm talking about small percentage of the portfolio, like 2% of my crypto portfolio, not a lot, but in the end, really what you're doing is why we look at the Bitcoin pairing charts, right? Is because we're trying to see if BAT or Ethereum or Ravencoin is outperforming Bitcoin at that time. And of course, we've seen through these market cycles that eventually a lot of these altcoins will outperform Bitcoin for a while. So we're all kind of waiting on that. People say alt season, which I don't believe that that's going to come until we have more retail in. So for me, if you were to ask, I would say after 20K is when we'll have a true alt season. And I don't think it'll be as crazy as last time because we don't have all the ICOs, but I do believe that we'll see some solid gains. So those are some of the altcoins that I'm looking at right now.
That makes sense. And I think this is, this is where a lot of people are looking when they look at altcoins, is actually about accumulating more Bitcoin. And I think we actually need to get to a point, if we talk about long-term altcoin holds. I mean, there's some that are really awesome. You have like the Monero, for example, which is highly private, right? And it's got a very strong use case. But if we see Ethereum, for example, and if we see that Ethereum network effect really, really building off, it can actually become its own beast in a way that it's still so tied to Bitcoin right now and what Bitcoin does. And when we actually see these markets starting to break out and really carving their own paths, that then becomes something a bit different. But right now, as we know, Bitcoin is the market leader. Bitcoin is the trend setter. Now, I want to move the conversation just a little bit before we finish up here to talk a little bit about Level Invest. So just, full disclosure here, I am an affiliate for Level Invest. Josh is an advisor for them as well, but it's a fantastic service. So basically what it is for $9 a month, you can buy as much cryptocurrency as you want, and that's the only fees you'll pay versus, using some of the competitors where if you buy a similar amount, you might be paying hundreds or even much more in fees on a monthly basis. So Josh, can you just tell us a little bit about Level Invest, why you're excited about and why you, put your name to it as an advisor?
Yeah. Well, when it comes to Level, it was last year, 2018, middle of 2018, when Chris Slaughter and the company came to me, talked to me along with a few other guys. Willie Woo, I think, you also Jimmy Song are both invested as well, and they're also advisors. And so, to see those guys on there as well, it just really says a lot, because these are two guys specifically that don't really get behind very many products or services, right? So you're talking about guys who really take Bitcoin, cryptocurrency, and these markets serious. But when I talked to Chris, they just really shared about what they're all about. And with Level, they're just really all about leveling the playing field, right? That's where the name Level came from. And because so often we see Coinbase, we see Gemini, we see a lot of these other exchanges that really exploit retail users. And what does exploit retail users means? It means one thing, they do have a trading site like a pro, right? And then they also have just the consumers, which is just the regular Coinbase or the Gemini, where really the only option they give you is to market buy. And then if you look at the fees on here, I mean, you're looking at hundreds of dollars to buy a Bitcoin, right? In the end. And so if you're somebody who doesn't even have enough money to buy a full Bitcoin, you're still paying, 10, 20, 40, 50, 60 bucks to buy a partial Bitcoin as well. And so you've even seen as well, Lark, that, as you know, the big news out was that Coinbase raised their fees for retail traders. And really they're punishing people who aren't trading enough. And so they're exploiting new users, they're taking advantage of retail. And I believe that they are doing this because, it's somewhat of a monopoly. I mean, they have a big hand in the market right now. So Level, the exciting thing about Level is that fiat on-ramp is coming. So for USD, and I know that there's a lot of people here maybe watching from around the world.
New Zealand!
Yeah, of course, right? So not only fiat on-ramp, so we're going to hope to start that by the end of Q4, which is the end of this quarter, right, by the end of the year, as well as checking and savings account right now, starting with the United States and USD. And so I know a lot of people are probably interested in that. But of course, there's regulatory issues. You have to take it slowly. So starting with the United States, the beauty of that is that, you don't have to pay, everything's under one roof, right? So your banking's under one roof for some people, your crypto exchange is under one roof. Eventually, there's been talk about other traditional markets and stocks and stuff like that. But you have a lot of these different services under one roof for $9 a month. You have this limited buys and sells of Bitcoin, Bitcoin Cash, Ethereum, Litecoin right now, more coins to be added later on. I know a lot of people are asking about that. As well as no wire transfer fees. So people who want to wire money back and forth from Level, if you're using checking or savings, you don't have to pay a wire fee. You don't have to pay $30, $40. Debit card for some people in the United States, of course. So that means that you're going to have access to be able to convert your money in your bank account. That means, your typical Wells Fargo bank account where your paycheck goes to every week, every 2 weeks, that can actually go into your Level account. And then from there, you can set aside to buy Bitcoin, trade that as much as you want. So again, one-stop shop, the future of money is kind of what we're calling it. No fees, We're retail friendly. I'm a retail trader, therefore I'm all about trying to make and develop a product and service that is retail friendly.
I love the idea of a subscription, basically. Look, if you're buying 20 bucks a Bitcoin one time a month, it's probably not going to save you money. But if you're doing much more volume than that, you should really look into this service. And there's a link down below where you guys can get signed up. But it's those fees, man, it's one of these just silent killers of your long-term Bitcoin portfolio for the people who are, stacking sats and chilling and doing that long-term dollar cost averaging. If you're paying 50 bucks a month in fees, as an example, holy cow, you just lost $41 of potential Bitcoin, which, as we know, that's potentially thousands of dollars of lost Bitcoin in the coming decade, if price predictions play out as a lot of us assume we might. So that adds up. That really, really adds up. Those fees, that's all just going to feed the beast when you could be reducing that significantly. And I think that's just a really important, financial management kind of thing, is get your fees down as much as reasonably possible.
Right. Yeah. And too, if anybody has any questions, they can always reach out to me on Twitter, or the Level team. I think that keeping a good relationships with other with members and consumers of Levels is going to be very important. And if you ever have any ideas, unlike maybe some of these big places like Gemini and Coinbase, feel free to share. Hey, I'd like to see this on a crypto exchange. Well, feel free to share that. I think that that's really important. But I feel like 2020 is going to be a big year. And I think that as the market continues to upswing, we're going to see a lot more buyers step in. And that's going to be prime time for trading. And again, instead of spending hundreds or thousands of dollars trading on Coinbase Pro, you can hopefully check out Level and check out what we're building there. So
awesomeness. Josh, thank you so much for coming on and chatting crypto with me today, man. It's been a lot of fun.
Thanks, Lark. Always a pleasure. All right,
Thank you.
Thanks.